The US dollar sits at the center of the global economy. Most people rarely think about this. Yet global trade, financial markets, and central banks all depend on the stability of a single currency. But what would actually happen if the US dollar ever collapsed? Let's examine this calmly and realistically. First, we need to clarify what collapse really means. Currencies almost never disappear overnight. A true collapse would involve a severe loss of confidence, a rapid decline in value, and widespread disruption across financial systems. Not just volatility, not just inflation, but a systemic shock. Why would this matter so much? Because the dollar is deeply embedded in global finance. International trade is largely priced in dollars. Government reserves are held in dollars. Debt contracts around the world are often denominated in dollars. If confidence in the currency broke down, the consequences would extend far beyond the United States. Financial markets would likely react first. Investors seeking safety could rush into alternative assets. Bond markets might face extreme turbulence. Exchange rates could become unstable. Liquidity, the lifeblood of modern finance, could tighten abruptly. Global trade would also face immediate stress. Businesses rely on predictable pricing and reliable settlement systems. If the dominant currency destabilized, contracts, supply chains, and credit flows could be disrupted. Not because goods disappear, but because coordination becomes harder. Then comes the issue of debt. Many countries and corporations borrow in US dollars. If the currency's value shifted dramatically, repayment structures, interest costs, and balance sheets could change unpredictably. For heavily indebted borrowers, this could create serious financial pressure. Yet there is an important counterpoint. The dollar's dominance is supported by deep financial markets, institutional trust, and the sheer scale of the U.S. economy. Confidence does not vanish easily. Even during global crises, capital has historically flowed toward the dollar, not away from it. This highlights a key reality. Currency stability is as much psychological as it is economic. Expectations, trust, and market behavior often matter more than headlines. Could the global system adapt? Over time, yes. Alternative currencies and mechanisms would likely gain importance. Trade settlement could diversify, financial infrastructure would evolve. But transitions of this magnitude tend to be gradual, not sudden. History shows that dominant currencies usually decline over decades, not days, which leads to the most realistic conclusion. A dramatic overnight collapse of the US dollar is highly improbable, but discussions about its long-term role are entirely rational. Because global economic power shifts, technologies change, and financial systems continuously evolve. The real question is not whether the dollar could ever lose influence, but how global systems would adjust if confidence patterns change. In complex economies, disruption rarely means disappearance. It means reconfiguration. If you want calm, clear explanations of global economics and geopolitics, subscribe to Global Analysis Point. Thanks for watching, and see you in the next analysis.